you got access to OpenAI, which is a private company with a closed profit structure through a special purpose vehicle, SPV. But it's part of a broader thesis around foundation models. Give me the short version of the thesis.
Sure. AI software is going to revolutionize knowledge work, and $13 trillion is going to be spent on AI software, and $3 trillion of that is going to flow into kind of what we think of as foundation models. So OpenAI and Anthropic are the two most prominent examples with the best models in the marketplace, both of which are in the venture fund. And $3 trillion translates into an expectation for around $16 trillion in market cap attributable to those foundation models. So to give you context, the global equity market is a little more than $100 trillion as of the end of last year.
Right.
And so 16 trillion, it's a big chunk, almost sector sized in terms of our expectations for enterprise value footprint.
ARK Venture Fund is an interval fund, which is made of 80% private companies, 20% public. You can get access not just only to OpenAI, but SpaceX and Anthropic. Why is it different or not the same as the Destiny Tech 100 that Caroline was just explaining at the start of the segment?
Because our interval fund is continuously offered, the price that you pay when you buy it is reflective of the value of the underlying securities in it. So if you buy $100 of an interval fund, you get $100 of net asset value. The Destiny Fund has a net asset value of less than $5, and they don't issue additional shares even if there's excess demand. So if you buy the Destiny Fund at $50, you're paying $50 for $5 worth of exposure. Like that fund, roughly a little more than a third is SpaceX, but buy $100 of that versus $100 of our venture fund, you actually end up with more exposure to SpaceX in our venture fund, which is just 4.4% or roughly 4% of the venture fund. So it's really actually, I understand people want to get access to innovation. I think that's absolutely the right thing to do. And you need to be careful about how you get access to innovation. You should do so in a way where you're not buying, 10 cents worth of stuff for $1 worth of spending.
So it's kind of down to structure and huge premium that you're currently seeing on DXYZ. Do you also think it's something to do with the narrative? This blew up on Reddit and other like-minded sort of retail-focused areas. Do you think that your own ARK venture investment fund will do the same?
I mean, I think that, I think that people are excited about innovation and they're looking for ways to access it. And this happened to kind of flash across social media channels in a way that inspired them to be like, oh, yes, I want access to that company. And conceptually, and actually practically, there are much, much more efficient and better ways to express that point of view. And I think you can't tell beforehand what's going to take off on Reddit, but you can tell when something is going to end in tears for people. And so when you're buying 10 cents for $1, you end up at the end of the day with something close to 10 cents, even if it doesn't trade that. Like there's all kinds of ways in which that premium should diminish over time. And so I would advise you to pay $1 and get $1's worth of stuff.
Brett, well said. $16 trillion by 2030. That's an arresting figure when you think of the overall market valuation for these foundational models. Do you wish you could access more OpenAI and ultimately Anthropic as well when you're thinking of the rest that makes up the fund, when I'm looking at SpaceX, but Epic Games as well, Freenome Holdings, Relation Therapeutics? How much do you want foundational models, the AI bet, to take up of this fund?
Well, the way we think about it is there are 5 major technology platforms entering the marketplace, and each has the potential for amazing compounding returns. And you're better off constructing a portfolio that has, yes, AI exposure, and autonomous mobility exposure, and multi-omics exposure, because those exposures could independently fail. Like, are we 100% right on AI? I think it's going to be an amazing revolution. But if that drags out to the right, it's unlikely that cryptocurrencies also will drag out to the right. So by exposing yourself to a number of innovation platforms, you actually end up with a more efficient exposure to innovation as a whole that delivers better returns.
Brett, last night, Bloomberg reported that xAI, Musk's AI company, is trying to raise between $3 and $4 billion at around an $18 billion valuation, according to, frankly, our sources, but also a copy of the prospectus. Will ARK, through the venture fund, try and add xAI, given your coverage of SpaceX and Tesla already?
I can't comment on future decisions. I will say that actually ownership in X confers a 25% pro rata ownership in xAI. And right. I think that the company's future is actually closely intermingled. xAI's competitive advantage is it has real-time access to everything that happens on X, which is where all news effectively breaks. And in a world in which historical data is commoditized, which is part of what AI models are going to do, real-time data becomes more valuable and dear. And so having a real-time decision engine sitting at the front end of X, I think is a really interesting and compelling value proposition for xAI.
Brett, as you know, last night I learned a lot about the venture fund, the mechanics of how it works. It's actually, I told you, very confusing. If you're a retail investor, you can access through Fidelity, Titan, and I'm blanking, there's a third one.
SoFi.
But my point, SoFi. Give me a sense of how your announcement that you've built a pretty small stake in OpenAI has moved the needle for that fund. Overnight this morning, have you seen new customers and investment try to rush in because they now know that they can have some exposure there?
I mean, the honest answer is I don't know, because we don't get flows with that high a degree of frequency. And the decision to invest in these companies is not a decision based upon how it's going to attract attention. It's because we underwrite the positions and we think they deliver outsized returns, even relative to public market exposures. So one of the benefits of this fund is we can look at, hey, this is an interesting company, and there's a comparable public company that this is actually cheaper than. And so I think that the potential for returns across all of these technology platforms is really profound, and we want every investor, not just accredited investors, to be able to have access to those returns.
Brett, going back to the OpenAI thesis as one of the winners of the $6 trillion market, what are the limitations of it going up and to the right? Because there are concerns about ultimately supply chain, this coalition that's being built because we're worried about energy, not only just the amount of chips that are necessary that are going to be building this future of generative AI, but also it's a competitive space right now. And also there's a weird corporate governance structure that goes on over at OpenAI. What are the risks for you on that name?
Sure. I mean, there are corporate governance structures risks, and you can underwrite those. So we've gone through and assessed them, but there is a degree of uncertainty there. There are regulatory risks across all of technology exposures. I think that we look back to even nuclear power is an amazing technology that was effectively derailed because of kind of the regulatory burdens put upon it back in the 1970s. And there's the potential that could happen with AI as well, where we're worried about something, and so we deny ourselves all the benefits of it, but still take on all of the risks. And we think that there's a room for commercial models like OpenAI and Anthropic's, and open source models like what Meta is developing. I think that the market will have a handful of solutions, any one of which could be profoundly valuable. And when you have this much market opportunity ahead of you, you go for that asymmetric return, where kind of like the one or two winners here are going to be profoundly valuable, and so we think an exposure is appropriate and actually necessary.